Let's talk about, the fintechs, which we know we've been talking about for the last 3 days. Fintechs have been very much disrupting the financial world. But tell us, how are they disrupting capital markets? And also, I guess here, this is where we want to broaden the idea of capital markets, don't we? So why don't we start with you, Iyacu?
Yes, certainly. First of all, thank you for having me here. Though capital markets sounds very boring, but if we look at it, it's quite a very interesting area. A lot of momentum all across the globe. And certainly, it has not been aloof from the disruption what the other industries or other sectors are seeing. And fintechs are certainly making a big mark in this segment too. If we take a few steps back, like capital markets and the underlying products, what constitutes a capital market, has been very traditional in nature. For example, if you look at fixed income products like bonds and other products like securities, they have been here since ages. And that's where they have the burden of legacy. And that's where the fintechs comes into picture. While they are disrupting this industry, but on the positive note, they are also complementing. They are working together with the large financial institutions and corporates and all to streamline the entire value chain. Being traditional in nature is very paper intensive, and there are various value chain players in between. So on an average, if you see any of the capital market products, there are around 7 to 8 players which comes into picture to make it happen. And you can imagine how much work goes in between these players and exchange of data and information and whatnot. So that's where these fintechs are approaching in streamlining these processes, eradicating some of the legacies and even some of the intermediaries in between, and making it more accessible. There are various other aspects as well in terms of if we see the audience who can acquire capital market products. If you see some of the most important products, like, again, I'll give an example, the fixed income bonds specifically are considered as low risk and high stability, but are not freely available for the retail investors. So that's where these technology companies and fintechs are coming together to provide solutions, for example, tokenization and digitization, which is making it much more accessible for the wider community, creating more revenue streams for the banks and financial institutions. And even on the supply side, if you see, bringing the cost of the entire issuance processes down, which means even SMEs and MSMEs in near future would be able to raise capital using debt instruments.
So that's quite exciting. There's a lot of disruption going on there, as you say, but there's a lot of complementing as well, which is interesting. And it's interesting you mentioned the need to get rid of legacy systems, and that kind of ties in with this whole idea of kind of leapfrogging beyond the traditional systems that have existed before. Damien, what's your perspective on this? I mean, obviously, Singapore is seen to be an example to emulate. What's going on in terms of the disruption that's happening within our capital markets there?
Sure. So in fact, this reminds me of when we talk about fintech, maybe 8 years ago, because I was involved with fintech since 8 years ago from the MAS. There was a time where people talk about fintechs referring to parties who are disrupting, parties who are going to eat some financial institutions' lunch, for example. But at MAS, we broadened that concept of fintech to what my colleague has mentioned earlier, into ones that not only are parties who could be providing products, they could disrupt existing financial institutions' lunch, but also at a greater level, changing the entire value chain in various aspects, such that it creates real value for everyone in the entire ecosystem. And that is where, when we talk about fintechs coming in, there's plenty of fintechs that we are seeing in the Singapore ecosystem. There are parties that are doing blockchain-related tokenizing bonds, for example, allowing parties to be able to invest at a much smaller ticket size. Or you have parties that are making changes to even things such as tokenizing trade finance-related assets. making it available for the purposes of others to invest in. In various ways, they are all widening and thickening the various liquidity as well as participation of what could be considered as financial assets, as well as allowing different parties to come on board and participate in getting access to such financial products. But I want to touch on one point which I think is not quite visited by various parties in this area, is that the roles of regulators and government, actually, in the whole grand scheme of things about in the capital market space itself. Government and regulators do play a key part. In the earlier sessions, we have heard about how cloud as a technology is very widely used and needs to be very widely used if financial industry players wants to be able to leverage on the different innovative ideas and services that's out there. And that's just one example. But if you look at in Singapore, for instance, we have put in place things such as a national digital identity to help to identify individuals as well as businesses. We have put in place financial information sharing frameworks and infrastructure that allows parties to be able to pool together information about their balance sheet, individuals' balance sheets across the range of banks, insurers, as well as securities markets. So if you look at it, these are all areas at which government as well as regulators could come and play a part. When you look at, just as an example, about the ability to share financial information about individuals, what goes on in your financial information for the purposes of ultimately we have an agenda about, say, financial planning, helping our citizens and residents to better plan for their financial future. But what does it mean right now is knowing what is on your balance sheet to know, then how should you deploy what kind of assets that you have in terms of, for example, excess cash that's in your current savings account that's really not making you too much of return, but instead could divert some part of it towards more effective deployment in the broader economy, and at the same time helping that particular segment of the economy to grow as well. So in a certain way, it is connected with regards to how government and regulators play a part, and these are examples of how we're doing in Singapore as well. I thought I'd better touch on it to share some of these things and food for thought as well. Thanks.
Yeah, absolutely. And as a Singaporean myself, I must say that digital identity, it's called SingPass, is just a godsend. You can get so much of your taxes paid, your bureaucratic things that you have to do. It is a marvelous godsend, and I have to say, as a citizen, it is fantastic. I hope this is something that can come to Africa soon as well, because it makes your lives so much easier. Now, of course, Irena, you have a Latin American perspective with IDB Labs, which is the innovation arm of the Inter-Americas Development Bank. So give us a sense of what's going on in your region.
Thank you. And building, I think, on Aditya's and Pang's comments, I think we are seeing similar trends in Latin America and the Caribbean, and opportunities, and also concern about some of the risks. But clearly there is a massive opportunity to build more sustainable, more efficient, and transparent capital markets for all. It's the pace at which we are seeing developments of new forms of business models for accessing better and easier capital markets depends very much, I agree, on countries that are having the right policies in terms of how to regulate, because some fintechs are just adding to the existing financial system, for example, in making easier record keeping or personal finance, etc., obviously leveraging, big data analytics and machine learning and AI and so on. And they're just integrating what they do into existing financial institutions, and that's sort of a good development that opens up more channels of better finance for some companies. But there are others that are venturing into completely new type of activities, and I think that touches on the opportunities that Web3 and the fractionalized economy open up. And I think those are perhaps more difficult to predict and to regulate. So when regulators take an activity-based approach and allow for companies to test this out in a safe environment, I think that's very conducive. And examples of that are, for example, collective lending platforms for SMEs. I think we just heard in the previous panel the opportunities for SMEs that are able to structure and monetize better their data on the basis also of a more universal digital ID system and verifiable credentials, and lending platforms, collective lending platforms that can capture that and use blockchain or distributed ledger technology to offer new products can be very effective. And so we are seeing very exciting developments on that front. I think that most of these solutions have to be kind of to some extent very localized, but the principles are quite universal and can be replicated across different regions.
Thank you, Irena. And let's see if that is something that could be replicated here in Rwanda. And that's where I'm looking at you, Iyacu. You give us a sense of what's going on here, what's being disrupted, and in terms of capital markets, how do you view that changing with all of this potential disruption, complementing, etc., that fintech provides?
Thank you very much. This trend is happening across the globe, and Africa is also not probably following, but also at the forefront and trying to respond to the needs of the different citizens across. And specifically here in Rwanda, I just recall something that was quite interesting. So we had some fintechs that were in this space, and they didn't have proper regulatory framework. That's back in 2018. And I recall that's when our organization, Access to Finance Rwanda, is market catalyst. We worked with the central bank to put in place appropriate regulations. And from that day, we have seen close to, last week it was 36 fintechs that have gotten licenses to go in different, to serve different needs. And yesterday I saw the latest one, 37 now. And most of them are coming really to respond to the needs that are there, that are probably not met by the traditional players. And I see this as a revolution in this space. Why? You are seeing tech people really partnering with those with financial skills, but also entrepreneurship skills. And I like that mix, because that mix is going to change the game. And just an example of, probably to bring it home, an example of one innovation that was displayed, recently. We did a study really to provide the evidence on savings and loans associations, these informal savings groups across Rwanda. And these are common pattern across Africa, especially sub-Saharan Africa. We have many of those. And they are serving something, probably a need that traditional players are not providing, because it's a small group, there is that bondage, and you can actually be transparent and share and be objective in providing or taking a lending decision or not. And we displayed data back then, and we're seeing here in Rwanda that on an annual basis, I think the latest data in 2021 is that we have close to $50 million being transacted in those informal saving groups. And that's huge. I know that's bigger than some small banks' assets. And this data was displayed to the entire industry. And clearly, no bank moved actually to do something around it. And for the last 3 years, we've seen already 2 fintechs that have registered to address this need. So they are digitizing these informal saving groups, and they are starting actually to raise capital. In fact, one attracted some investment, offshore investment, just to address that need. Yet the traditional players are not moving, and now they are starting integrating with them, so which is great. So I think clearly the disruption will continue, not only for savings and credit products, but we are seeing insurtechs coming in play. We are seeing wealth management technology providers, wealth tech. We are seeing land tech, which is happening across Africa, and we see more of those. Crowdfunding, I think you alluded to it. Democratizing the way capital intermediation is done, because why should I, if you have money and I need money, why shouldn't we talk through technology? And as long as it's trusted and there is a regulatory framework that is in place, I shouldn't go to a third party, yet we can talk through technology. So, all that is happening, and I think Africa is also in this play. Thank you.
That's absolutely true. And if there are any banks listening, there you go. Iyacu says you're missing an opportunity here, and that's why the fintechs are coming in and, kind of broadening the market and offering lots of solutions for SMEs, for your, smaller farmer. And essentially that's what we're here for. It's all about financial inclusion, isn't it? And so, you mentioned InsurTech there, Iyacu, and this is where Alex is the expert, because your company is, essentially a reinsurer. So give us a sense of what's going on in your field.
Thank you. So as a reinsurer, one of our 2 key roles that we normally play to support the capital markets. The first one is about mobilizing finance. We collect the premiums, we try to put them together and make them into bigger chunks that you can then be able to invest. And the first challenge that we're actually seeing in that, not a challenge, rather opportunity, is the savings, the peer-to-peer lending that you mentioned. And we do find that more and more of our people, through digitization, are coming up, and the peer-to-peer lending that they used to do before, they used to do it themselves in their homes, passing each other money, it becomes becoming more visible. So what the fintechs are then giving us as an opportunity is that visibility. So we're then seeing that capital that is available, we are seeing the transactions, and we are then able to then think of what insurance products can we then put. How can we put some credit life when they lend each other money? How do we then support them? So that's the number one. The second one is when we collect the funds, we have the role of then allocating them to productive sectors. We have to invest in where we need to be. So recently, we have actually been going to say, can we do private equity investment? And one of the challenges that we're then discovering, or an opportunity, exciting, is something that you also mentioned, crowdfunding, right? All of a sudden, we are a capital provider. We are now competing with somebody who's just posting in a WhatsApp group, I've got this nice app, please can you try it? When you try it, do you want to invest? That's actually a different kind of sourcing of capital that we're actually finding is becoming a competition for us when it comes to actually how do we invest, how do we allocate capital. So we're actually having to rethink how do we either partner or how do we work better with them.
Yeah, that's fascinating, isn't it? So crowdfunding being one of these innovative new ways to actually broaden our idea of capital markets. Let's talk about more innovative solutions now. And this one I'm just going to throw out to any of you, because really we've been talking about trying to build efficient, inclusive, sustainable capital markets. So give us a sense of kind of innovative solutions that you've worked on that you'd like to obviously share with us. Whoever wants to jump in first. Yeah?
Certainly, I can go first. So there are various solutions right now. We are working in Qatar in collaborations with various entities there, both private and public sector. Is the first and primary which starts is with regulations, right? So we are working on various aspects of regulations. There are a few parts when we talk about capital markets, and we somehow try not to include them, is Islamics as well as sustainability. So we also have those two focus areas, that how we can create the infrastructure and support for Islamic finance as well as on the sustainability. Because while we are talking about innovation and digitization, there are some byproducts of that too. While we are leveraging on cloud computing, data science and all, we also have to keep in mind that it also leaves a residue in terms of e-waste, high use of energy utilization. So how we can always have a inclusion of sustainability in the work what we are doing. We don't want to create a new problem while solving one. So that's where we are having a 360-degree view in which there will be various platforms, various parties which will come together. And the core of this is collaboration. We know that any of these value propositions can't work without collaboration. So, and the collaboration is directly from the central bank to the agencies and to the fintechs. So all the participants in the equations is coming together to solve it. We are also looking at how we can make it more inclusive. Like in previous panels, we have heard about how SMEs have been left mainly unbanked and underbanked and unloved. So how we can bring them into this financial journey, how we can make financing easier for them, and on the other side, also how we can create new investment opportunities for retail customers and other segments. So, and there are various initiatives which we are working on, which we target very soon to go live in Qatar and create a very good and sustainable capital market infrastructure.
Great. Other examples, Irene?
Yeah, maybe just following on that one. So at IDB, at the Inter-American Development Bank, as you may know, it's the largest development finance provider for Latin America and the Caribbean. So just to the public side, we offer about $14 billion of public financing, and through the private sector arm, IDB invests about $9 billion of financing to corporate and private sector. And the third entity, which is IDB Lab, that I run, we're there to kind of innovate in instruments that can make all that financing much more effective in terms of development effectiveness. And we fund ourselves as a group, IDB, through the capital markets. So we like to put our money where our mouth is. So we have been built through an alliance of many players, over 60, LACchain, which is a large decentralized blockchain network with over 200 nodes now. We used it to issue an end-to-end bond, a bond end-to-end on blockchain on this platform by the IDB. So an IDB bond issued to investors in the stock exchange of BME in Spain, part of Next, the Swiss exchange. And it made the whole process so much more efficient, transparent, from the registration to the settlement and the whole entire process of issuing the bond. And now we can take that to partners and to issuers in Latin America and the Caribbean. We've done that using the sandbox of the regulator in Colombia with the third largest bank, Davivienda, and we want to see a lot more of that, because the process of those bonds are in the end going to reach the small companies and the people that in the end we want to these to benefit. But what I'm really excited about is that as we have build this de facto sort of digital public good with this layer linked to the national ID systems of multiple countries, and on which we are adding the verifiable credentials, we can then start thinking of programmable fiat currency and this issuance of tokenized assets, real assets or digitally native assets. And I think that opens up a whole new a window for new capital markets products and new capital markets participants. And I think you refer to that as well. So I think that we're just seeing the beginning.
Wow, that's a lot for just the beginning. Iyacu, what kind of innovations have you come up with?
Yes, thank you very much. As a development partner, which is funded, I see some of my funders here, Sweden, MasterCard Foundation, and Jay-Z Overseas Aid. Clearly, we look at how fintechs or technology can serve the low-income people that most of the times left out. And I recall that one of the innovations that we brought in the market is around micro pensions. Across Africa, I think we know that only those that are in the formal sector, majority are saving for old age. Actually, it's a deduction from source, so you are somehow compelled to save for old age. But we have many people in the informal sector who are actually making money, but they don't save for old age. And that's really, I call it a time bomb, because when they reach old age, you find that there is old age poverty, because they could be active, but when they are old, they are no longer active. Then they would depend either on us in the formal sector or the government. And that's where you hear about social transfers that are being made from the government budget. Now, if you don't correct that as early as possible, that's a generational issue. Now we said, well, looking at different pilots and models across the globe, I think we're inspired by one in India, which was actually originated by a fintech called Pinbox Solutions, which is housed in Singapore. And we said, well, let's do a feasibility study, understand how these people, this majority, I think formal sector is not less than 90, no, informal sector is not less than 90% in this market. And I think that's that's the pattern across this continent. We went and clearly looking at the feasibility and the design aspects, everyone wanted, because I think there's one element which I should underscore. Currently, you need services, financial services. And when you need them, clearly, any service provider that will kind of onboard majority is that service provider who will actually meet you where you are, meet your core needs, but also the way you want that financial service to be or product to be provided to you. And I think when we talk about mobile phone in Africa, is very key, because you can find me where I am. I might say, just you want to reach me, use my phone, and everything would be done there. Now we said, well, that's the channel we want to use. So it was deployed through technology, end to end, and guess what? Last year, we had 2.4 million subscribers. And when you look at it, in terms of contributions, we are close. The latest figures from the regulator, I think it's around 40 billion Rwanda francs, which is 40 million almost, or above a bit. Now, what does it mean? Growth is 65% per year, and that's informal sector, low-income people. So there's a business case there, but probably we are not seeing it, or financial service providers are not seeing it. And technology can actually bring all that crowd, or that mass market, into the financial ecosystem. And that's what we are seeing. So micro-pension is there, and people are consistently saving for old age. So I would see, there's so many use cases that are coming up, and I feel like, technology will continue disrupting this space. Thank you.
Wow, those are quite extraordinary statistics you just quoted back at us. 65% annual growth, did you say, every year? That's an enormous amount. Again, you are making the message very clear that there are banks that are not addressing this, and that's why the need for fintechs to come in. Now, I'd like to go to, well, I think Irena mentioned it earlier, blockchain and distributed ledger technology. This doesn't mean very much to regular lay people, but of course it means a lot to the fintech space, and it is just revolutionizing essentially capital markets, the ability to, get across things in a transparent way, in an efficient way, and in terms of security as well. So how focused are each of you on blockchain-based platforms in order to really, the revolution that we've been talking about, it is happening, but how focused are each of you on this? Let's start with Africa and get a sense of, again, from Alex and Iyacu, what's going on here first?
So the objective that we had at the time was how, through our agriculture arm, which is ECA Africa, they wanted to develop a solution that would make it transparent to the people who are receiving the policy and the people who are funding the policy, so that everything is transparent. And we actually exploited putting smart contracts on blockchain so that we can then be able to pay promptly, be able to identify as soon as the trigger occurs, we actually are able to pay the claim as it happens. But there's also another area that we think is going forward. Blockchain gives the opportunity, I think she mentioned it, about transparency. From an insurance perspective, we want to be able to trust the information that we use. We operate on utmost good faith, but we also would like to have the information, the data, that is available so that we can be able to do better. And I think blockchain would help our underwriters be able to price the risks a lot better because of that transparency that they can see from the data.
Very interesting.
Yes, I think I just add one point. I think really when you look at the entire process flow for any financial transaction, especially in the capital market infrastructure, there are so many intermediaries that when you talk about so many intermediaries, that involves cost, inefficiency, even security, because, exchanging different hands, you need really to make sure that everyone is doing the right thing. And there's now, leveraging the power of blockchain technology, I think we shall see efficiencies. We shall see actually reduced number of those intermediaries, or actually even kind of reducing the time it takes to complete a transaction. When you look at, origination, settlement, clearing, in that entire process flow, clearly you find that there are so many inefficiencies that need to be shortened and may probably be made more efficient through blockchain technology. And I think we shall see use cases very soon in this part of the world as well. Thank you.
Any other examples of what's going on in the other markets that you guys cover?
Yeah, certainly. For Qatar and Qatar Financial Center, we are very bullish about the blockchain and the digital ledger technology. But again, being practical, that not all the problems can be solved by or requires the solution. So wherever it fits, specifically where there are multiple intermediaries who have to come together, there is a requirement for transparency and ease of doing business between multiple participants. So there are other ways as well which we are looking at these technologies, that while we are working on blockchain and or digital ledger technology, we are also seeing that how we can couple with other emerging trends. For example, artificial intelligence, cloud computing, and then quantum computing. So how we can couple these solutions together to create a uniform platform where it can address multiple of the problem statements. So we are looking more in terms of like how we can have one solution which can address multiple problems rather than having multiple solutions for multiple problems.
And I guess AI is something we're going to get on to hopefully towards the end. Damien, you want to add to that?
Yeah, I'll just add on the perspective that when you look at the financial system, is global in nature. And therefore, if you look at capital markets, similarly, it's also global in nature. So what we've been looking at the MES is trying to make sure that we are plugged in well into these global financial systems and capital markets. And the use of the blockchain itself does provide, as colleagues mentioned earlier, the opportunities to be able to add transparencies, the speed, and probably reduce risk at the systemic level. And these are the things that we have been working on in various partnerships together with, for example, with Swiss National Bank, for example, with Banque de France. We've also been working with the New York Fed Reserve Bank, and on different perspectives, tokenizing deposits, as an example, tokenizing assets, and how do we allow that atomic settlement, leveraging on all these tokenized currencies as well as assets, to make sure that they are able to be done, reducing the risk, adding up the speed and cost, reducing the cost-wise to participants, but also at the same time involving even currencies that may be less liquid, as an example, which is very common globally. How do we involve them from the perspective of a global financial system, making sure that they play a part? They may require involvement of some proxy currencies, as an example, in the exchange process itself. But how do you involve them in the entire exchange between digital assets as well as currency flows to make sure that we gain the benefits as a whole global financial system itself in terms of lowering the risk, more transparency, faster transaction speeds, and yet lower the cost? So these are the things that we've been working on together with the global partners, because at the end of the day, the financial system is global to begin with.
Irene, did you want to add to that?
To add, maybe that, so we've talked a lot about the benefits in terms of security, transparency, and safety that this technology can bring. I think there are obviously other benefits in terms of simplifying record keeping, simplifying and automating regulatory compliance, opening up again through the fractionalization of the economy and the ability to tokenize different types of assets, helping people and companies monetize what they have. But I want to touch on so the benefits are there, but what for? And I like very much what Alex and Bosco mentioned, because it brings us to the use cases. What for? And I think understanding what problem you're trying to solve first, and then looking at what this technology would do to solve for that is very important. And then the second thing is that I think there is in terms of making it as easy as possible. In fact, ensuring that people don't even have to know how the technology works to use it requires a whole effort of different players, and I think that what MAS is doing is a great example of, again, building digital public goods, because these highways are also built on standards and harmonized rules that can also be replicated in other countries, and that cross-border issue will make all these use cases all the more powerful, because in the end, most of the fintechs that we're seeing emerge, coming up with these products, are born global.
That's great. We have 15 minutes. Unless you can make that point really quickly, I do want to move on to the other things. I've got loads of questions, and I don't have time looking at the clock. But go on, Iyacu, very quickly.
Just quickly,
yeah.
I just wanted to say that, the global trend that is there is that you find that many asset managers have started actually acquiring some stake in blockchain technology kind of firms that are there, just to make sure that they are understanding how it can bring, this technology can bring efficiencies in what they do. And you see it across the US, UK, and other major cities. But once again, yes, there are all these benefits we are talking about. But I think for like African countries, I think it's very important that we go back to the foundation. Do we have the right foundation in terms of digital infrastructure that will actually enable such kind of use cases in the blockchain technologies to happen? And I think that's a requisite kind of or foundation that we need to put in place so that actually we also leverage on the new technologies coming up. Thank you.
So essentially you're saying you're not ready yet, you haven't got that infrastructure, but you're working on getting that infrastructure in place. Okay, that's great. Now, both Desmond and Irene mentioned this whole need for globalization, this need to work together across borders, very crucial. And we know there are initiatives of collaboration here in Africa. You've got the Pan-African Payment and Settlement System. You've got an African Continental Free Trade Agreement, which has got a protocol on digital trade. Over in Asia, you have a payments connectivity between Singapore, Thailand, Singapore and Malaysia, and Singapore and India, plus Project Nexus. So tell us about the vision behind these sort of payment connectivities, trying to work across borders to simplify things, to make it easy for, obviously capital markets to work across borders as well. Let's start with you, Damien, and then I can move on to Iyacu and Alex about what you're seeing here in Africa.
Yep. Thanks for that. So in fact, underpinning capital markets is really allowing the money to flow to where they need to be, where you are going to invest in, where the returns are coming back from. And at the end of the day, it's about efficient payments rails that is broader or larger than an individual country can actually be involved in. And therefore, when we were looking at the various opportunities for better payments connectivity in the region itself, so that is where we had established initial payments connection with Thailand that allows payments flows to be done very fast. You just need to know what is the mobile number. In this case, just the mobile number of parties whom you are sending the money to, and you're able to send it, and the party will be able to receive it at low cost. So that was the start of things. Then we expanded it to with India, between the UPI and our own retail payments, faster payment systems, PayNow. And in the same vein, but we have established such bilateral connections, and we were seeing that it is really, really painful to develop and put in place payments connectivity on bilateral basis. And we probably could do better as a whole of region if we were to do this on a multilateral basis. And that is why the particular work together with the Bank for International Settlements and involving the ASEAN 5 member states, and that's common vision among enabling these payments, monies to flow much more easier. End of the day, it supports and allows the benefits to be reaped by the citizens, where there are much people flow within the region itself, as well as business flow. There's a lot of trade that's going on in the region. So all these are the kind of learnings that we have gained along the way, and really the vision is about creating and benefiting. End of the day, we talk about fintech for good. It is really about benefiting the people, benefiting the businesses, allowing for economic and social growth. And that's where we believe that it is important work, but it is something that is important for us to come together. It's not easy, but it requires us to all come together to do it.
That's right. And then ultimately it's financial inclusion, that's the goal. So let's get the perspective from Africa. Is there a lot of work going on with the many partners here in your region?
Factors that contribute to the success of FinTech Hub, probably just to illustrate how all these will be playing for the ecosystem to flourish. First, it's having the right talent. And when you look at talent, clearly, as one country, you may not have, the talent that is required. But clearly, through those agreements, you have openness to actually attract talent, retain, and also exchange talent. Number two is about demand. Do you have demand for these fintechs that are coming up? And I think through these treaties, clearly we're saying there's this whole African market that is available, and treaties are signed. But once again, we need to see implementation of those treaties so that there are no kind of constraints that are coming on the way of fintechs that want to expand across Africa. Number three is really capital. Do we have capital for these innovations to actually scale? And I think we see initiatives. I'll talk about Kigali International Financial Center already attracting different funds to be able to invest in all these fintechs that are being housed in Kigali. And that's with a view actually to expand across Africa. And I think that's very critical because you can't actually work on some components and leave this one because capital is key for them to scale. And the last one is policy and regulations. And when you look at policy initiatives and the incentives that are there, clearly all of them are pointing to a fact that, they want to support innovation and scale across Africa, but also conducive environment that is there. So I think I think all these collaborations across different markets are pointing to that and say, well, all those four factors should be in place for the market to flourish. And I think really cross-border kind of agreements are very critical in this space. Thank you.
Alex?
So I think just to follow on the demand and the need, we've got an example of a project that we're working on, which is Project Drive, where for the Horn of Africa, we're trying to put in inclusive insurance for the pastoralists. And the area where they operate is like we've got a border, but they don't have a border. They need to go across countries when they take their cattle across. Now, the challenge that we've got is if the person takes the insurance cover while in Kenya, and then they take their cattle into Somalia, how do we handle that? How do you handle that? Or if this season they are here in Kenya, the next season they are now in Somalia, how do we do the payment? How do we get that money? And as a project team, we're actually having to do code software for Kenya because there's no connection. Then we have to replicate the same in Somalia. So I do appreciate actually that there is some work that is going on. The demand is there. There is need for us to be able to do those kind of cross-border payments and be able to have the regulation that would say, I've taken the cover in Kenya, can I still get the cover in Somalia as well?
And gosh, that's not something anybody would have thought about. You know, cattle, they need pasture, they move around. So they're not looking at borders, are they? Now, very quickly, I'll go to Irene and Aditya about the kind of initiatives that are happening in your region. Is there collaboration between the various states? What's being done, for instance, in the Americas?
Yeah, thank you. Surprisingly, I think we have the similar impetus to, as somebody called it on Tuesday at the initial Capital Meets Policy Dialogue, a sense that we have to multilateralize the digital space. And we are seeing things happening at the policy and regulatory level, similar to what Damien was talking about. Although, following the roundtable with governors yesterday, I was very impressed by the level of harmonization and standardization that already is being reached, at least from the remarks than what we hear is happening in Ghana, Kenya, Tanzania, and other markets. Much more, I should say, integrated already and standardized than across Latin America and Caribbean countries, so I hope it's a motivation. So that's on the policy and reg level, very important to have this harmonization. At the level of the digital infrastructure, Bosco mentioned, you have to have those foundations, and then players can build on top and make and they can scale much faster. And I think there is a role, obviously, for multiple entities, including neutral institutions like IDB. So there, through LACchain, we are developing all these protocols in accordance with regulations so that the digital ID, the digital credentials, the payment rails are in place for anybody to use and to build on top. And we've done that with one foot at IDB and one in the industry, because there are 60 industry players that have participated. And I'd like to invite anyone interested to join in, and of course, MAS. And then there is the level of the investment flows, which also you mentioned. And And there, just like in Africa and in other parts of the world, in Latin America and the Caribbean, we've gone through a venture capital winter. Funding really dropped from 17 billion in 21 to less than a third of that last year, and it's looking probably slightly lower this year. So I think that attracting more capital depends also on helping startups access a bigger addressable market quicker. And many of our startups are actually, solving for the same problems. So I think there is an opportunity also to exchange business models and help them maybe kind of gain scale faster to attract better capital.
We have to acknowledge there is a global slowdown, hence this venture capital winter that you speak of. Very quickly, Aditya, we've only got 4 minutes. I've got 2 other big questions I want to ask. So if you can
sure. So
wrap that up.
very quickly, in a very short sentence, divided by borders, united digitally, right? So that's how we look at when we are creating any of these base infrastructure. If you see capital markets, 2 of the biggest problem right now is liquidity and market fragmentation. And the basic reason behind that is the heterogeneous nature of the regulations and the market size. So when we started devising the core infrastructure, we have kept these 2 components in mind. We know that the harmonization of the regulations is very essential for seamless flow of investments and development of products which are applicable and easily passported into different jurisdictions. So that remains our core focus and major consideration.
Thank you. Now, interesting, Iyacu, you mentioned talent. Talent is something that's come up so much during this conference, the need for talent in areas, for instance, this region, Africa, and others as well, because, of course, countries like Singapore had to deal with it, and lots of other places in the world have had issues around talent. So, Aditya, I'm going to pick up with you again, because you're really a good example of the kind of talent. You're actually Indian-born, you've worked in Singapore, you're now in Qatar, and essentially you're filling a job that never existed before, which is, innovation and fintech head. So give us a sense of, how talent needs to be mobilized and how countries are doing that and how Africa can learn from this as well. How do you retain your talent and how do you get foreign talent?
Certainly, if we see the way now the new generation looks at any job is quite different. So the way that the job is offered to them should also change its perspective, right? We have to see how we can have remote working facilities, how we can train them in various areas. And previously, one of my fellow panelists brought up a point like how technologists are now working together with the business, how technologists are now working together with the legal team directly on creating, which has never happened before. So it has to be again looked at multiple dimensions, like how we can help the legal team understand technology better, how we can have business understand technology better, and vice versa. So that's where we focus on to, like how we can develop these core talents in-house, in-country, how we can give them progressive knowledge, how we keep exposing them to newer aspects so that they can themselves devise which is the best area they can work upon.
Okay. I'm going to go straight to Alex on this one. You were telling me earlier that you actually don't have a talent problem, which is surprising, because that's what we've heard everyone talking about, is the lack of talent. Tell us how you solve it.
I think for us it is 2 things. I think the first one is relationships. I think when we want to recruit, we normally talk to university and ask who is available, who are the people, what's the skills that you've got. And that then helps us to find the right people that we actually need. The second one is actually being a COMESA organization. Our pool is actually COMESA, where we actually manage to get, and we actively actually seek and try to have that diversity within. And the way that the government of Kenya, who was hosting us, has been able to support that is what enabled us to get the talent that we need by looking across COMESA.
Okay. I'm going to go skip to the very last question. 20 seconds. This is a rapid fire round. So, this is a session that's called Reimagining Capital Market Infrastructure for Emerging Markets. Quite a mouthful. But if each of you were to imagine the kind of infrastructure required for emerging markets, and you needed to pick one key component, what would it be? If you can answer in 5 seconds or less, it's one thing. So let's start with you, Alex. And we'll start from there.
Yeah, I would say ecosystems. We need to work together, collaborate, so that you can build the kind of infrastructure that works for the people.
All right, Iyacu.
Well, it looks like with him, but I'll talk about both hard digital infrastructure and soft. So hard, I mean the digital rails that are needed, and I think that should be a public good. I'm of those that think also that internet should be a public utility like water and electricity. Number two is about those soft infrastructure, policies, regulations that are conducive. Then talent, capital, and demand will follow. Thank you.
Okay. So you didn't have one, you had two there. Irene?
Shared digital rails that can help corporate citizens and governments participate in the emerging Web3 economy.
Okay. Damien?
Yeah. So I'll go with similar to on the soft side in a sense. I thought it's common purpose in a sense. And that is where I hope that we all have a common purpose of where we want to drive inclusivity and how financial services and fintech can come in to serve the greater good. Then I think the various infrastructures, what is necessary at the infrastructure level, the capital, will all flow at the same time.
Common purpose. Aditya?
Relevant fintech and innovation.
Okay. Excellent. Well, you heard it here. These are all the key components needed. We all need to come together. I think the unifying theme was working together, common purpose. So that's a real message to all of you there and all of us up here and everyone else outside that we all need to come together and work together. That's fantastic. Give them a big round of applause.